he's not making a predictions. When the S&P goes from bear market back to bull market, 92% of the time it continues to make gains. So now we have taken out that last lower high, and the Dow especially, it's been congesting a lot this year. But if this can break out here, which is a bit weird at the moment because we've got this whole, are we going to go into recession?
All right, guys, hello and welcome to this special video. We have our special guest, Charlie Burton. And in this particular video, I'm going to ask Charlie his views on the major stock market. It's going to be quite interesting. In fact, I'm going to ask Charlie what he thinks about this very peculiar chart that was drawn by a guy called Samuel Benner back over 100 years ago, about 150 years ago, and his predictions in the market, what he thinks about it. Does he agree with this Benner cycle that you're seeing here? And also, what are his views about the long-term picture on the stock markets? Is he bearish or is he bullish? All right, guys, join us. All right, guys, welcome back. By the way, guys, before we start talking about the charts, if you haven't already done this, make sure you do it, which is Charlie has a fantastic offer, which is his gold level membership. Go ahead and check it out. The link is charlieburtontrading.com/LTGold. And by applying the promo code LTGold, you get a massive discount, a significant discount to try out everything in his gold level membership. And more about that at the end of the video. Charlie, how are you doing, by the way?
I'm good. Thank you when you invite me on. It's always a great honor to come onto your channel and speak to your followers.
Yeah, thanks. I should have chosen a top like yourself. I went for something rather boring. And
no, I'm in a shorts and t-shirt. It's quite warm at the moment.
Okay, sounds good. Sounds good. So Charlie, before we start talking about your overall big picture view on the stock market, I wonder if you can maybe indulge me in just because I made a video recently on YouTube about this particular something called a Benner cycle. I'm just wondering what you think about it. So it's very peculiar because it was made in 1875, and yet it's managed to predict. In fact, even Benner himself says the time is when to make money. He says that in his view, in his chart. And it's interesting because it's caught some important tops and bottoms, like the 1920s, like the 1929 bear market crash. He came very close to it, the Wall Street's crash in 1929. He caught the 2007, that's extraordinary, over 100 years ago. He caught the top of the dot-com crash of the end of 1999, beginning of 2000. So there it is on the screen. What do you make of it? Just to be clear, I'm not saying Samuel Benner got everything right. No, I'm not saying every single one of them was correct. There were some that was wrong, but majority seem to be correct. What's your view?
Yes, it's a historical cycle, and you're right. It's within a certain amount of time. It appears to be quite accurate on a number of these, but not all, as you said. But it's the same sort of, when you talked about the crash of 29, I think it was a good year or so early, in fact, wasn't it? And so that's what I'm saying. It's one thing overall having some analysis, and then you've got to try and make money from that. So if you were a year early and you shorted the stock market, let's say, a year later, you'd have just blown your money out, of your account. Now, if you're an investor, however, and you're a longer term investor and you came out a year early, then you've missed the last parts of the 1928 through that year, but at least you're out, ahead of the long before the crash. So I think there are certain important points to make there when it comes to these sorts of cycles. But even the cycle for this year, I did have a look at it, and so it's saying, a bottom in 2023, and as you say, that's supposed to be at the end of the year. Well, you and I are both pretty much in agreement that we probably bottomed in October of 2022. So it's a bit out, but you can take a big picture view of it and say, it's accurate, but it can still be out by a year or so. So probably better for longer term views, not as easy for a shorter term trader. Even a swing trader, it'd be quite difficult to actually precisely do it. But you did make a good point. You can't just trade off of something like this. It's just part of your overall analysis anyway. And I think that's the most important thing.
Yeah, you're absolutely right. And I want to ask your opinion about the fact that the chart seems to predict, or again, predicting quotation marks, a bear market to begin from the end of 2026 to all the way to 2032, which is extraordinary. I think he's probably onto something there. So what do you think about that? I mean, that is a bit interesting as well for me, because I think once this bull market comes to an end, I'm expecting a much bigger, longer term bear market, which seems to correspond with more or less with Banner's 2026, the end of 2026 bear market top, which for me, I think is going to happen sooner, probably 2024, 2025, towards those periods. Well, what do you think about that?
Well, I mean, he's not making, let's be straightforward, he's not making predictions. He just built this cycle, and the cycle just has a makes periodic lows and makes periodic highs. And sometimes they can be slightly out. So as we've already just said with 2023, but we all know that the stock markets go through their own cycles anyway. So they tend to, historically, if you just looked at the historics, that the average bear market tends to last anywhere between sort of 18 months to sort of 2.5 years on average. And the average bull run is sort of 5-6 years, so a little bit longer. So that sort of ties in with this sort of stuff anyway, that we have to always expect there are going to be bear markets in the future again, just like we had one last year. As you're sensing, I'm not that bothered about it personally. But yes, it's big picture connotations that it seems to come in line. So it could be that somewhere around 2026, as you say, maybe it's, as you just said, 2025, a year earlier than that. I'm not jumping up and down with excitement by it.
Let's go to your overall analysis of the market. So, well, let's talk about, I want your view about the overall big picture. Before we go on to the charts though, you told me recently, which I actually thought this was quite interesting, one of the great traders in the world, he actually was in this book. Was it the first Market Wizards book? It was in one of these books. Market Wizards, there it is. If you haven't read these books, guys, by Jack Schwager, make sure you get them and read them. Market Wizards. And in one chapter, there's a trader whose name is Paul Tudor Jones. Tell us what Paul Tudor Jones said recently in a news report. I read about it in Market Watch. Tell us what he said, and do you agree with him?
Well, I mean, Paul Tudor Jones, actually, he's been interviewed twice on CNBC this year. I think it was late January, maybe early February, he was interviewed, and he'd sort of switched to a more bullish view there. He said, look, there's $1 trillion on the sidelines of capital that's going to have to come into the market. So, there's a lot of bears out there, but there's a lot of cash that needs to get to work. And again, he was seemed to be fairly bullish on the stock market, and his view actually, as you know, that he felt that the Fed had peaked in their interest rate cycle, but that's probably not the case. But as they're trying to say, just last week we've had the FOMC, and they're sort of still talking about, their dot plot still suggests another 2 hikes, but that could change. But nevertheless, he's remaining bullish there. And I think if one of the world's greatest investors and traders is bullish the stock market, you should at least acknowledge that he's got greater minds working for him than anyone that I know, myself included. Or these people are, he's a multi-billionaire for a reason. Where you have to be a bit careful is some of these hedge fund managers sometimes have ulterior motives when they go and get interviewed. So they might go and say something which is contrary to what they're actually doing as well. So you have to sort of read between the lines sometimes. But Paul is a pretty straight up kind of guy.
Yeah, he's a stand-up guy. I think I agree with you. I guess my point is, and here's an interesting point, Charlie, as I'm sure you know, a lot of the YouTubers out there have been extremely bearish on the stock market. Maybe not recently, but certainly in the last several months, the last several weeks, all I ever saw on the feed was very bearish YouTubers, not just the titles and the thumbnails, but even the content themselves were very bearish and negative. Some calling for end of the world. The end is coming. I mean, you and I agreed many months ago. I mean, you and I both remained bullish. We've been expecting markets to go higher. We actually reached our first targets at one of my first targets was almost reached 4457, which was very close to one of your targets of 4460, apparently. So yeah, tell us what you think overall.
Yeah, well, we were just talking earlier on and sharing all sorts of stats and figures, and I'll just share another one. Bank of America just came out a week ago and said that just in this past week or so, the S&P has officially gone into bull market now. It's 20% up off of its lows from October of last year, 2022. So now it's 20% up off of those lows. Then by definition, at least, it's technically now in a bull market. And so there's been a lot of talk around that this week. I mean, obviously the Nasdaq's up like 40% just this year alone. When the S&P goes from bear market back to bull market, 92% of the time it continues to make gains over the following 12 months. So we're filming this in June of 2023. So we're talking about by June of 2024, there's a 92% probability that the stock market will be higher than where it pretty much the S&P where it currently is, and higher by an average of 19%. That's 19% on top of where it is pretty much right now.
I see. That's interesting. I mean, that's just recently taken out the August highs. We can see there went above the 61.8% golden ratio retracement from your charts. I can see there. Yeah. So what are your odds, do you think? What are the odds in your view, in your perspective, of reaching all-time highs, of reaching the 2022 or 2021 highs, the end of that period? Yeah, that's right.
Well, the odds have certainly risen now, because from a technical analysis perspective, as you've just quite rightly pointed out, the August highs of 2022 have now been broken out, because from a technical perspective, we were making a series of lower highs, lower lows, and a lower high there and a lower low here. So now we have taken out that last lower high. Then again, from a technical analysis perspective, that's a good sign for the bullish case. So the door certainly does open up to to testing those all-time highs. And actually, if we look, what we also need to do really is to consider those other markets as well, such as the Nasdaq. And I know that I don't want to digress too much, but the Nasdaq's been leading, as we know, with the whole AI story this year, and there's all sorts of debates around what's going on with the Nasdaq. But the Nasdaq, in relative terms, isn't far off from getting to those, and the Dow especially. It's been congesting a lot this year, but if this can break out here, then the Dow could very quickly be up there testing those all-time highs. So I think the bullish case is looking pretty good. I think that we've just been talking about this, that of course, even if there is a bullish case, even if the S&P, let's say we have a crystal ball and it is going to go there at some point in the future, in the next whatever year, then the S&P will still do pullbacks. It's still likely to do pullbacks along the ways. As we say, the markets like to breathe in and out, and so they don't normally just keep going without any sort of retracements. So it's likely there will be some retracements, even if we do go up to new highs. But yeah, I'm going with those statistics that the odds favor more upside over the next 12 months, which is a bit weird at the moment, because we've got this whole, are we going to go into a recession? Is it going to be a hard landing, soft landing? All of these macro stories going on out there around the world as well, as far as growth is concerned and contraction, and whether we are going to start to contract, and whether that spills over higher interest rates affecting corporate profits, because they have to borrow at companies have to borrow at higher interest rates. There's all of these arguments going on, but one thing that you and I know is that markets like to rise on a wall of worry, and there's plenty of worry out there at the moment. So maybe that will help fuel the rally further.
Yeah, a very good point. As a matter of fact, I'm glad you brought up the Nasdaq, because I mentioned the Nasdaq and the tech sector a long time ago, several months ago. At least a few months ago, and I said that this sector, the tech sector of the Nasdaq, could very well outperform. I'll see if I can put a clip there, what I said in this section. Guess when the sweet spot occurs? The sweet spot for the presidential cycle, the pre-election year, is between January to July. So according to data from Jason Geppert, he says that during January to July, you see the greatest strength. He says during this seasonal windows, the Nasdaq and the X rose all 9 times with no losers. its average return was over 24%. One thing I mentioned recently in a recent video, I want to get your view on this, just talking about it, not going into any charts. But given how extended we are in this rally in the stock market, I think that it's quite likely we're going to see a pullback, some kind of pullback in the near term, probably the next couple of weeks or so, next few weeks. And I think that pullback is going to be very important because that pullback, it needs to stay above support and it needs to be corrective. Not, this is something I mentioned recently, it cannot be impulsive to go and break down support. It must remain above support, for example, a level you mentioned as well to me, Charlie, which is the May lows, which is 4,050, I think you mentioned.
Yeah.
So it needs to remain above that if this uptrend is going to continue. So my question is, do you think a pullback is coming? Do you think it's likely for a pullback or some kind of a retracement, short-term pullback? And it really needs to stay above that support to continue higher. What do you think about that?
I think it's likely because if you look at the Nasdaq, especially, it's up like 40% or so or more now for the year. The S&P's up 15% for the year now. Very healthy return. You think about historical returns. What's the average return for the S&P over the last 100 odd years? It's about 7% annualized returns. So again, strong returns so far this year. But the likelihood of a pullback, considering the runs that they've had, yes, it starts to increase because markets do like to breathe in and out. So it's certainly increasing that likelihood. But it's not to say that we can't push higher. But of course, we have to at least expect there to be a pullback at some point. I think one thing that a lot of traders have to be very careful of, highly technical short-term traders can trade any market in any direction, but where, of course, it makes a point of interest to say, oh, is there going to be a pullback? Are we close to a near-term high? And it's interesting to debate. But for a lot of traders, you don't have to try and short a market which is going higher. You can just be patient and wait for the pullback and then wait for the opportunity to get long again, so to speak. So don't always
absolutely. I think it's quite likely by the time this video goes out, we might have started the pullback. And I think I'm expecting the pullback to be corrective, not impulsive. So I'm expecting it to stay above the May lows. And yes, I agree with you. I think once the pullback occurs, once the corrective pattern correction completes, I'm looking for much higher levels as well, similar to you. And guys, if you haven't already done this, make sure you do it, which is Charlie runs a fantastic service, his membership, his gold level membership. If you haven't already taken up the offer that he made, go on this link. That's charlieburtontrading.com/LT gold. And then you apply the promo code LT gold and you get the nice discount. Take it for a test drive. I don't think you'd be disappointed. I think you're going to like it very much. And Charlie just explained very quickly what's involved. And actually, it's quite interesting, Charlie, you were saying to me earlier that a number of your own students, a number of your own traders are, right now managing funds. And tell us more about that.
Yeah, I mean, it's, I train traders within a trading community, and I'm online with them every day of the week, or Monday to Friday, in my online trading room. And yes, some of my members are money managers now, or fund managers. One of them, who himself, his best trade last year, he made $233,000 on. So a great trade he had there, just using the techniques that, essentially that I've taught him over the years. And I trained him several years ago personally, but he's still a member of my community to this day. And I think that's a really important thing, that these people are, now I have people who have got experience right away up to 30 odd years worth of trading experience. They don't need me, but it's still nice being part of a community, because trading can be quite a lonely thing. And to have that guide, same with what you have with your members, to have that, just general guidance to help them. And they like being part of a community because it's lonely on your own. But the people in my community have full-time jobs, so they can't be in the trading room itself all of the time with me. They can cherry pick whenever they want to come in. Everything's recorded, all my sessions are recorded. So, and that suits a lot of our members. So, but yeah, it's really about serious traders. This is not some get rich quick thing, scheme. And so it's about people who are serious about their trading and wealth generation over the longer term.
Fantastic. Great. Thanks so much, Charlie. I appreciate that. Guys, I'll put the link for you guys in the description. Check it out. And I'll see you guys in the next video update. Cheers.